Good day, I'm Martin Gago with Market Radius Research. It's Thursday, June the 1st, 2023. We've got CEO Sebastien Mailhot and CFO David Montpetit of DBO Technologies joining us. DBO is a developer of haptic entertainment and simulation systems. The company just released its March fiscal 2023 financial results, and management is here to review and discuss it and take questions from the audience. But please remember, this is neither recommendation or investment advice. We're here to learn about the company. Sebastien, David, thank you very much for joining us to review what's a pretty impressive year. And why don't you tell us what happened last year?
Thank you, Martin, for having us. It's been quite a number of time, but really happy to be here and spend some time with you as well and with all the shareholders or people that are following DBO. So really happy to connect and definitely to discuss our year end for fiscal 23, which was one of our best year ever. And of course, we're really excited to give some update on the the video gaming market that people were attending. So let's start with the presentation. Moving to slide number 2, the usual nice slide, right? Before we dig in, of course, everything direct to the disclaimer regarding forward-looking statement. And as we're pointing out, all dollars are in this presentation are Canadian dollar, except otherwise specified. So strong fiscal year 2023. So beginning with our financial results, of course, you saw that we achieved strong revenue growth across the business for both the fourth quarter and the year. Total revenue for the year were up 60% to 34.1 million, including 10.4 million in the fourth quarter. So really happy with the type of sales we were doing. System sale for the year increased 63% to 25.6 million, driven largely by the installation of nearly 72 new DBO equipped theatrical auditorium. Meanwhile, sim racing drove growth in system sales revenue for the home entertainment market. Another topic of revenue that we like, right? The right for use rental and maintenance revenue for the years that increased 53% to 8.5 million. As of course, annual ticket for DBO reached an all-time high with strong showing, of course, from Avatar, Doctor Strange in the Multiverse of Madness, and Top Gun Maverick. So a pretty good robust years in terms of theatrical and of course, right for use. On the profitability side, as we stated on multiple occasions, we are focused on delivering profitable growth. So while we still have work to do, we made solid improvement in fiscal 2023. Gross profit excluding amortization related to cost of goods sold increased 42% to 17.7 million, including a contribution of 5.2 million in the fourth quarter. However, our gross margin excluding amortization decreased 643 basis points to 52% of total revenue. Our margin were impacted by our product of market mix, as we had a higher proportion of sales to theatrical exhibitor and theme entertainment system sale compared to the prior year. Our margin were also impacted by supply chain constraint and inflationary pressure, which seems to be a topic we have heard more in the last 12 months. We made progress with regard to implementing price increase and purchasing negotiation, which should help our margin in fiscal 2024. Additionally, partway through the fourth quarter, we saw transportation costs come back to more or less where we would expect them to be after a tough 12 months. Our adjusted EBITDA for the year was about 1.8 million, which was an improvement of 93% and included adjusted EBITDA of 648,000 in the fourth quarter. I should also note that we made a substantial investment in inventory during the fourth quarter to limit our risk of exposure to geopolitical supply, as well as ramping up to ensure enough supply to deliver on certain order over the first half of fiscal 2024. So Martin, this is a quick summary, of course. Great year for 2023, increased sales, increased gross margin, improvement in EBITDA, and continuing to focus to trending that profitably upward.
All right. We have a question from the audience here. You mentioned, since you started as CEO as being profitable growth, can you give some color on how to evaluate current year profitability and expense management, and what could be expected in the short term as you're growing? Revenues are going up, but so are expenses. How are you sort of balancing both the revenues and expenses, and what should we expect going forward, as much as you can say?
Yeah, good question, because ultimately our role as executive is the balance, as you just said, about growing the business and improve profitability. But as you said on multiple occasions, D-BOX is focused on profitable growth, and this has been said for the start when I started as CEO. Fiscal 23 was, of course, a good progress to compare to 2022, but we realize we still have to do work to do on the profitability front. As we have mentioned earlier, during the year, supply chain impacts significantly our gross margin, being down 6% compared to last year. We estimate that 3% is related to supply chain impact and the other part of mix of revenue. And Martin, this is important. So 3% of 34 million is $1 million. So this is as we had to deal in terms of making sure to deliver sales in that tough environment. As well, we mentioned that in the last quarter as well, it was important because if there's one or down, we need to do something. So we did take some action, including price increase, another one that is kicking in right now in the second part of the year that should contribute to improve the profitability. On the expense side, we are a growing technology company and we are expanding in multiple strategic markets. Additional expense were incurred in Q4 to deliver the gaming project, deliver the incredible level of sale in a tough environment, and work on other growth initiatives. We still have the objective to bring EBITDA as a percentage of sales to 10% quickly, and ultimately to drive positive net income, not just positive EBITDA, but positive net income. With everything we had to face in 2023, I feel comfortable in front of shareholders to say that I am pleased with the sales level reach, the year-over-year improvement in profitability, and overall cash and expense management. And yes, we want to reach that 10% EBITDA as a percentage of sale as soon as possible.
All right. Okay.
I'll let you read for if there's some other question, definitely to on that financial aspect.
No, I think we're good on that. Why don't you continue on to the rest of the business?
So last quarter, of course, we discussed the traction around the sim racing. In this quarter, we're happy to discuss recent tangible development in the video gaming market. Of course, it's important, quick remember about our focus. So with approximately 3 billion gamers around the world, video gaming is an attractive market for D-BOX as an industry. According to Montpetit research, the market has been growing at 20% CAGR and is expected to reach 45 billion by 2024. We are currently focused on the PC gaming segment of the market. The reason is simple. Compared to console gamer, PC gamer are early adopters of new technology and are much more likely to spend money on peripherals and hardware. That strategic positioning is important for shareholder where we are. Martin, I am so happy to have that slide. People were waiting that we launched that chair. Did it take longer than we thought? The answer is yes, but now it had happened. So May 29th, so just recently, we had our long-awaited announcement of Cooler Master Motion Gaming Chair, the world's first gaming chair made with D-BOX Haptic technology. We are very pleased to share with you that the Motion One is now available for order through Cooler Master official online store at $2,300 US, which include access to our full library of content for 1 year. Right now, it's getting launched in Taipei, Taiwan, with the Cooler Master, and we have executive down there. We have it down there to assist that show. Again, what is that chair all about? Through the combination of movement, vibration, and texture, Motion One adds an entirely new dimension of realistic feedback that enhances gaming and entertainment. Our high-fidelity haptic provides an extremely immersive experience that truly allows to experience the game if you were into it. In addition of being the most immersive gaming chair on the market, Motion One's versatile design also provides unparalleled comfort for working and on-demand haptic sensation while watching movie and TV series or listening to music. And Martin, I'm proud to say as well that before the chair was launched, it has already won 2 awards around design and launch of technology product. And another part as well that is really important is that chair is both suited for commercial and consumer market. So it's not just a consumer product, it's as well as potential in all our business segment.
So, and just to clarify that, if I was, let's say, driving a crane or moving something on an industrial site, that could be sort of plugged in to give me haptic feedback if I'm getting some sort of feedback from the equipment I'm operating, that sort of a thing?
Tiffany, that chair is a turnkey solution. If we can see that, as you can see, can be used in professional training for desktop training, as you were saying, because it provides all the vibration and texture, and could be as well in a local base, an arcade or something like that. You want to do gaming or to do an event or even VR. So that's why right now that one is a fully integrated solution compared to having to develop a pod by third-party players.
So you'd be comfortable with this operating in a commercial environment with sort of being sort of sat on hundreds of times a day and that sort of a thing?
Yes. The actuator we're using in our system is the same reliable actuator that is driven on the commercial market.
All right.
One thing that is important as well about building an ecosystem is that the D-Box has been focusing on video gaming is not limited to the Motion One. We have a long history of encoding PC game dating back to 2008 when you need to build an ecosystem. When we encoded the game, as you saw, for Need for Speed Undercover. Since then, of course, we have more than 100 game curated PC game working with Ubisoft, Microsoft, and other studios. So building a gaming ecosystem is just not the chair, is everything that goes around it. One thing that was important, Martin, when we were launching that chair is as well was about getting more content. So yes, we had those encoded games for game, but as well, we were able to add technology for games that are not encoded. We have recently launched our adaptive gaming mode and audio mode, which enable haptic feedback on pretty well any PC game, greatly expanding the appeal of Motion One and D-Box Motion platform to gamers. The adaptive gaming mode provides gamers with haptic feedback based on the action that they trigger through their keyboard, mouse, and gaming controller. Our proprietary audio mode allows real-time creation of haptic effect based on the audio, such as gunshot, explosion, and vibration. Through customizable profile, player can decide how and when they'll experience different effects, putting them in control of their own experiences. These are 2 innovations that D-Box is bringing to the market in parallel with that chair. And for video gaming, we are not just focused on any one product, a new mode, or a new content. We are developing an ecosystem. And that ecosystem has a lot of potential from esport and simulation to virtual reality and the metaverse, an ecosystem that provides an immersive experience that allows gamers of all levels to engage in a way they never have before, an ecosystem that enhances their experience as a whole. For example, with virtual reality and the metaverse, people can enter the virtual world of gaming and interact with the environment. And with D-Box, they can also feel what it's like to be there. Turning to the broader outlook, D-Box is well positioned for growth in multiple key strategic markets. In addition to building upon our leadership position in the theatrical market, we continue to gain traction in sim racing and are establishing a foothold in video gaming. Importantly, the development we discussed today in video gaming and last quarter in sim racing represent a new revenue stream for D-Box in fiscal 2024. While we are scaling our business and investing in growth, it is important to remember that we are focused on delivering profitable growth and improving profitability. That being said, geopolitical issue, inflationary pressure, and supply chain constraint are expected to continue for the near term. Again, the price increase and purchasing negotiation, as I mentioned earlier, and the investment we made in the inventory should help to mitigate these concerns. With that, Martin, of course, it's a quick overview, and I want to leave more space for question to answer as much as we can. Thanks for the time for everyone. And now moving back, Martin, to you and the Q&A session.
All right, thanks, Sebastien. You mentioned that with the Cooler Master chair, you get 1 year of free content or with it. That sort of implies that following that year, there'd be a subscription or some pay-per premium usage?
Yeah, definitely, Martin. For us, after that, there's going to be some feature that's going to be staying, let's call that for free as basic mode. And as well, for all the library of the code and movie etc., people will have to subscribe to have the, let's call that the bells and whistle and the full package.
Have you solidified the pricing model for a year from now, or is that still under consideration?
I think that the range that we are right now in terms of product, so with that is the area that we want it to be. So that chair has to be, let's call that a $3,000 price point, which is a full entertainment seat. There's going to be development in the future, other product at different costs, but of course the experience might be different.
All right. Question here, any minimum order in the contract with Cooler Master?
I won't comment specifically on Cooler Master, but as I said in the past, is when we're launching a project, so that these are volume product, right? So any partner we are working on needs to commit to a minimum order. We are not in the tens of units because that's how we work. So again, not on Cooler Master, but physically, yes, we sign with people that commits to a sizable quantity.
All right. Can you discuss how the notion of rights of use pertain to the Cooler Master chair? I guess that line of revenues, will that apply to Cooler Master as well?
Definitely, as we're building, let's say, the footprint into those gaming seats, as we're saying, the gaming chair, we have basic feature because it's important for us that when we launch a product that there's minimum people can do. And after that, like I said, we know we have movies, series, we discuss about in the future music, relaxation. So all those kind of additional content will create this, let's call that the subscription mode, right? That people will be able to subscribe. And yes, they will arrive in that right for you, or let's call that content revenue mode on top of the hardware.
Gotcha. What is a reasonable sales goal for the next few years, or for me to add, is there a general band of revenue growth on average investors should expect over the next few years without having to be too specific?
What I can be saying today is definite. I won't be specific definitely because we don't give forward statement, but the chair as first thing to put maybe the opposite, we are not in the mass market business right now. That being said, for a product of that range specifically, it has to have significant impact on our revenue. So let's just say, etc., that we need to be in the thousands of units, and I'll put that really in general with brackets with thousands of units. So for the short-term future.
All right. I always love asking about the movie theater business and sort of theatric versus streaming. And for people who don't sort of watch the box office sales and so forth, can you give us some commentary on what the movie theater industry is looking like? How and as well, how are your customers in that? The theater chains, they were in not great financial state. Now I'm suspecting they're improving their balance sheets and cash flows as there's pretty strong box office content coming through.
Yeah, so I'll answer too about, let's call that the industry. And after that, you were saying at the state of the partner. And David, if you want to add on that. So on the state, on the industry, and look at everything specifically, and it's come from the ground, premium offering is more important than ever. Period. So this is this, and of course, D-Box fall into that premium category. And this, Secondly, occupancy of premium offering are higher than they were pre-pandemic by percentage. So this is true for DBOX specifically. So I think it proves a point. Thirdly, another thing that was around theaters, streaming will arrive and the theater will die. Blockbuster needs a theatrical window before a streaming window to pay the bills. So they were all things have been said, etc. The window has been balancing, but when you do a movie, let's just take Avatar. We're saying to break even, you needed to do 1.5 billion-ish to do something. So you cannot do that into streaming. So what I like about that market, Martin, and definitely I'm let's say, is it's a market as opportunity, a market that needs to upgrade itself into premium offering, and as well that the consumer as well, when they go out, they want premium offering. So I think we're well positioned. If I'm going to be talking about the executor, and that is there and it's proven by figures, data, and even discussion on the day-to-day. The second part, Martin, of your question, which is important, is yes, through the COVID, some exhibitor had a tough time on their balance sheet and some were better, right? So the only thing that in terms of progression into that industry, and you saw we announced a lot of room of DBOX, and you haven't heard from competition to do that. So we did a pretty good job. But of course, some players are taking the time to bring down their balance sheet and their asset in terms of accelerating a lot the capex. So this is the only dimension we need to find the good partner that are in good shape. That they want to invest, yes, but they are in good shape as well to be profitable customers.
All right, and your net, you had a net increase in screens as well as a net increase in seats. Is there some sort of give and take, like some theaters get closed or seats get reorganized and put elsewhere? And is there sort of shuffling within the theaters as they sort of reorganize their platforms, call it?
I do a quick one, and David, you want to complement? You want to take this one?
You can go and I will add after, no problem.
Perfect. So Martin, what you have to say is with that premium February, we had discussion. So of course, we're adding new screen. We had discussion as well to optimize screens, sometimes closing one screen and reopening two in different circumstances into their vessels. And there's some screen as well, some partner that we decided that sometime has been temporarily closed to reposition as well. So that's what we have been doing specifically. So that's what we're net growing, but that's what they've been reshuffling of some of those partners to sometimes better location or taking two screen and building them into one screen if they wanted to move to a VIP seat. So that's what it explains the difference. But maybe, David, you have additional color to give on that.
I think it's the same line than you, and I think that the exhibitor tried to be much more efficient in the way that they manage their screen with additional content that is going out now with after COVID. So I think they have the experience to determine in how many screens they want to maximize their DBOX assets.
All right. Does the price of the Cooler Master chair, like the full retail price, go through your profit and loss, or only your haptic hardware, or if you understand, or a piece of it? Or do you actually sell the Cooler Master chair, and I guess, or does Cooler Master actually sell it?
I can answer on this one. The Cooler Master chair, we're just in our P&L, it's only the Haptic hardware. It's the responsibility of Cooler Master to sell the chair itself. It's a Cooler Master chair with the DBOX powered by DBOX Haptic. So we have only the Haptic hardware in our revenues.
Gotcha. All right. I'm just curious. I presume you can't be too specific, but you launched the Mercedes platform, co-branded platform, earlier in the year. Is there any commentary on how that platform is performing?
I won't be specific. So just remembering, there's two platforms that's getting launched. One with Mercedes, right, and one as well with RC. So there's let's call that a non-Mercedes branded, and another one. So both have been launched. So I'll just be saying in the fiscal year 2023, sales on that platform was limited on the timing it would put in the approbation and for the manufacturing. So we should be an acceleration on that, but we're happy with the discussion and with Bitcoin. And then with the partner we're discussing, we should be an acceleration of that in the first part of the year.
All right. There are a bunch of numbers here in this question here. System sales for home entertainment were 5.9 million, I guess, for the year, and 2.2 million for the fourth quarter. Can you discuss the mix of those sales? And I guess, could we take Q4 sales and annualize that for the remainder of the coming year?
David, do you want to take the question?
Yeah, yes, I'll take the question. So I think that of course, I won't answer specifically on the annualization of the fourth quarter. I think this home entertainment business, which include also our sim racing business, is going very well. Of course, as everybody knows now that the Cooler Master Chair has been launched, so revenue will kick in Q1 of 2024, so that will help to continue to generate growth within that home entertainment market. With the sim racing that, as Sebastien mentioned, with Mercedes and track racer as well. So we continue to grow in that sim racing business, which is included in the home entertainment as well.
All right. Just generally, can you give any commentary on sort of the industrial simulation commercial side of your business? How is that with sort of VR and trying to make the industrial world more efficient and so forth? How is your haptic systems going in that industry?
Well, for me, I'm pretty happy to see that we had contribution on the sales level for our segments. So our professional and simulation segment continue to grow, which of course is not entertainment, but it's an area that people are really buying for ROI and performance. So it's continuing to grow as smaller simulator are getting the norm or getting more deployed than big 10 to 20 million simulator. So it's an industry that is industrial. I mean, it's really slow in terms of going through it, but we're quite happy. So this is, for me, it's quite positive. And on the team as well, one of the things that we know our team business has been progressing. So it's less industrial, but it's less commercial. But of course, as all people that went inside for 2 or 3 years doing nothing, you see people traveling, you see people going to a theme park, you see going like that. So this is a trend that around the world has been pushing, and people getting to opening their new park or LB and track and that now spending more as they have generated money back to expand into new experiences.
All right. In the last year, you focused on partnerships. Can you comment on the focus of your partnerships for the coming future? I guess they're implying what industry segment or what types of partners. Obviously, you can't name specific organizations, but what type of partnerships are you trying to grow?
Yeah, so of course it's going to go into the three, let's call that segment that we're having, right? Theatrical and racing and gaming. Mainly around theatrical, there are going to be 2 types of partner we're looking for. Definitely either big new exhibitor which roll out, or let's call that reseller that could deploy D-Box in a more massive way than we do. As an example, in Germany, we have a partner that's doing the sale, the installation, and the first level of services, and over the year deploy 100 screens. So these are the 2 types of partner we're going to get on theatrical. Racing, as we saw, we now are playing more with the F1, the Mercedes, so all those players around car manufacturer or brand around that, NASCAR, F1, Red Bull, Mercedes, all the type of people that now are getting the norm for us to deploy and have more visibility and growth. And gaming is going to be as well about people to resell hardware or use the Haptic of D-Box into their own solution, but as well about content creator or people that could accelerate or want to deploy experiences. So as an example, we did something, we can share that, but there's nothing specific. So we did something that was public. So, or let's call that our Haptic chair. We are doing a project and we're getting some consumer to test a relaxation around that. So, and we are asking people to test the effect, how they feel that specifically. And usually we have 100 or something like that. It's a test, right? About how would they feeling around that. It's in collaboration with Strom Spa, which is a spa chain in Quebec, that they have a couple of spa, and we have more than 1,000 people that applied to test the product, which is really a lot for a small project. So these are the type of area that we're looking about where the Haptic experiences will have the more traction, using the same hardware, the same Haptic, the same technology, and that as well, that they're looking at the price point that people are willing to pay decent amount. So we improve the margin and we get more dollars in.
All right. There's a question here about the racing simulation market, I guess specifically in the UK. Is there anything you could comment on that?
If the question is, we announced last fall, I'm trying to guess the question. Last fall, we announced that we deployed the first site, which was a racing simulator center, which we had 60 simulator in partnership with the F1. And we're saying there would be more. So if the question is around that, because it was UK, that one was in the UK. So the question is yes, of course, that we're saying they want to do 30 over the next 5 years. And of course, there's other that should be arriving. I won't be giving timeline, but of course, there's a multiple. So the success is good and the deployment continue. So I'm guessing, Martin, that was the angle of the question. But if it's different, maybe.
So is there softness in or is the UK market showing good growth?
For that project or UK as a whole? That's what I'm just trying to grasp the question.
It sounds like more as UK as a whole.
Yeah, well, UK definitely. Well, UK is definitely a good market for racing, for theatrical, etc. The only thing we have to say in the current timing, we know European and a lot in UK, energy cost is a big challenge, right? So this is something that they had in 2023 to handle. But as they have, of course, a higher premium into theatrical, this is a market that is a prime target for us in terms of theatrical deployment. But as well, in terms of racing, this is a big market, and they have a big racing association.
All right. Could we find the Xbox haptics used in the esports world?
Well, yes. So the console is on our product roadmap. Working D-Box with Xbox, we did mini launch with them. So technology, everything is working, right? We have been 6, 7, 8 years ago with the Rodin launch and multiple projects with them, including in the Microsoft. Let's call that the product roadmap certification around console, right? Is the next market after PC. So it's not a technology challenge, it's the deployment in both console into racing and console for gaming chair, which is definitely not a technical challenge, but it's a half commercial business development scale challenge.
Okay, sorry. The person, sorry, I meant D-Box haptics.
Okay.
Could there be sponsorships, I guess, with D-Box haptics?
Yeah, so D-Box is a sponsor in esport into eNASCAR. So the eNASCAR series, we're doing that. That is something we're using. The only thing I would have to say is we are doing stuff in esport for visibility, but ultimately people want to make money. It needs to be visibility that creates business. There's some part in the esport that right now we are looking at it, but there's a lot of sponsorship happening in esport, but a lot of people is brand positioning and there's no direct sales, correlation. So that's the only dimension. So yes, esports, yes, we're looking at that. Yes, to have D-Box haptic, but the way we're doing like that, we are cautiously looking at that because of the real short-term impact of that industry for most of the player in it.
All right. Looks like we are done with the questions here, gentlemen. Thank you very much. And any final comments as we wrap things up here?
Thank you, Martin. Thank you again for the shareholders. And again, we are paid to find solution. We are paid to grow the business. You want a growing business and a profitable business, and we have to deal with the short term of everything that is happening, which we had a lot in the last year. So let's make sure that profitable growth, both word of it, are part of our thing, and we're happy with the result, but we need to be better next year, and that's what we'll work on. Thank you for your trust.
All right. Thanks a lot, gentlemen. Thank you for the update, and looking forward to talking again soon. Cheers.
Thank you, Martin. Thank you, everyone.
Thank you.